Did you know many UK businesses are leaving money on the table when goods come back from overseas? International returns can trigger legitimate customs reclaims, but only if the route is right and the evidence is solid. In this video, we'll break down returned goods relief, RGR, and where it fits alongside other customs reclaims. Returned goods relief, often shortened to RGR, isn't a blanket refund. It's a specific customs relief designed for goods that are exported and then returned to the UK. To use it properly, you need to meet the eligibility rules and keep a clear evidence trail that links the return back to the original export and import. When that link is missing, things like MRNs, proof of export, or consistent product identifiers, claims can be delayed, queried, or rejected. RGR demands proof. Without the right documentation, claims can fail. Let's delve into what you need to ensure eligibility and success. RGR is just one pathway. Other customs reclaims can include correcting overpaid duty or VAT, or fixing issues like classification, valuation, or process errors depending on the facts. The key is choosing the right route early because each one has different rules and evidence requirements. In this video, we'll stay high level, then in future episodes, we'll break down each reclaim route in more detail. Each reclaim route has its own rules, timelines, and evidence requirements. When you understand those differences, you're more likely to choose the right route up front, build the right documentation, and avoid delays, queries, or rejected claims. A common reason claims get delayed or don't go anywhere is missing MRNs, that's the movement reference number from customs, and weak proof linking the return back to the original movement of goods. That's why an evidence pack and a clear audit trail matter. They show what happened, when it happened, and how the documents and data tie together so you can support the claim and stay compliant. Linking your order, return, export, and re-import records is vital, so you can show it's the same goods moving through the chain. When that link is weak, claims are more likely to be queried, delayed, or rejected, which creates rework and can leave duty and VAT unrecovered. Start by capturing returns data right at initiation. That's where most evidence trails either start strong or fall apart. At a minimum, record the order ID, SKU, description, quantity, value, return reason, and the shipment tracking reference. That early capture becomes the foundation for a compliant workflow and makes it much easier to match the return to the export and re-import later. Next, match each return to the relevant export and re-import references, often using the MRN, the Customs Movement Reference Number. This is what ties the paperwork together and creates a clear audit trail from the original shipment through to the goods coming back. Then collect identity and condition evidence at intake things like clear photos, SKU labels, and where relevant serial numbers. The goal is to show the goods being returned are the same goods referenced in your records, and that your evidence is consistent and time-stamped. Next, compile your evidence pack and make sure it's organized and retrievable. Then submit the claim or declaration via the appropriate customs route, depending on the case. And don't ignore the exceptions queue. Mismatches, missing references, or HMRC queries need prompt handling to keep the process moving and protect compliance. Watch out for what we call data ghosts, returns where key references are missing or can't be linked back to the original movement of goods. Missing MRNs are one of the most common examples. When those links aren't there, claims are far more likely to be queried, delayed, or rejected. Keep your product data consistent. SKU, description, and identifiers should match across your order, returns, and customs records. Capture and file evidence as you go, not weeks later. And tighten returns intake controls so quantities and item IDs don't drift. Mismatches are a fast route to queries and rework. Here's a simple example. A UK fashion retailer ships to the EU and gets regular returns back into the UK. If they capture the return details at initiation, keep SKU descriptions consistent, and match each return to the relevant export and re-import references, they can build a clean evidence pack and reduce the back and forth that causes delays. Even small gaps like missing MRNs or mismatched quantities can turn a straightforward case into an exceptions queue. Now take an electronics business where serial numbers matter. Precise tracking means capturing the serial at return initiation, verifying it at intake, and making sure it matches what's on the commercial and customs records. That level of control strengthens the audit trail and reduces the risk of queries or disputes later. If you found this useful, subscribe for more practical HMRC-ready explainers on RGR and customs reclaims. And if you want to see how this works in your operation, book a walkthrough or an audit scoping call. Quick note, This video is general information, not tax or legal advice. Your eligibility and outcomes depend on your specific facts and documentation. Outcomes always depend on your specific facts and documentation. If you're assessing eligibility, have the basics ready. MRNs, returns data, order ID, SKU, quantities dates, proof of export, and where relevant evidence of duty, VAT paid. By understanding RGR and building a stronger evidence trail, you can make customs reclaims more repeatable, reduce avoidable delays and rework, and protect margin on international returns. Take action today. Subscribe for more practical guidance on RGR and customs reclaims. If you want to pressure test your current process, book a walkthrough or an audit scoping call. And in the meantime, start refining your returns intake and evidence capture because a clean audit trail is what makes recoveries repeatable.